Welcome to Indianomics. The much-feared April 2nd deadline is upon us when US President Donald Trump has threatened he will impose reciprocal tariffs on all countries, especially on India. He names us several times. India's exports to the US is only $85 billion, or 2% of India's GDP, and our imports from the US are only $45 billion, which is around a little over 1% of India's GDP. But if tariffs on imports from the US and indeed other countries is reduced to zero, can there be a flood of imports which can endanger many industries and crops? Today, we first take a look at the agricultural sector and check out how many lives and livelihoods may be endangered and how India should or can tackle it. Joining me is the accepted expert on the field, Ramesh Chand, Member Agriculture of the NITI Aayog, and Harish Damodaran, Rural Affairs Editor at the Indian Express. I think the best brains on agriculture. Dr. Chand, Harish, thank you very much indeed for sparing time for us. Well, Dr. Chand, let me start with you. What is the area, the vulnerability within India itself? How many crops and how many lives are we talking about in terms of impact?
Latha ji, I feel before jumping to specifics, we should talk a little bit about wider implication of what President Trump is seeking in trade from other countries.
Okay.
You see, now reciprocal tariff means that if every country has to have same tariff, then you lose the opportunity to take advantage of trade. Second is that these things are agreed under WTO, under multilateral trading agreements. So if Mr. Trump goes his way, I think that will unsettle this multilateral trade agreement, and every country will be forced to have two kind of situation. One in response to what US demands, and second is in general what we have committed under WTO.
What you're saying is, let us assume that the US says the average difference between average Indian tariffs and average US tariffs is, say, 10%. So he imposes 10% on all Indian goods, and we also have to only bring it down to 10. You're saying that we will have a separate tariff for the US and separate tariff for non-US countries. Will that be the situation that we can live with, or will we be pulled up by the WTO?
You see, it is not only India. He's asking for this thing to every country.
Okay.
I think in this kind of situation, I would have expected WTO to call a session and discuss that how we deal with this situation. Right now, Mr. Trump is looking at interest only of US, and he is asking other countries that you align your tariff and your trade to my situation. So it's a very complicated kind of situation. But in the short run, I think in order to avoid disruption in the trade flows, in order to avoid sudden change in situation, countries will adjust to reach some agreement with the US, leaving aside whatever is the most favored nation agreement with other country. Okay. I foresee that kind of situation.
Okay, so just to for purposes of economy of time, let us assume we have different tariffs for US goods, and for the same thing, say for instance milk. The tariff, milk powder, tariff on US is less, but it is more for New Zealand and Netherlands. Let's assume that. Still, if you can tell me, what will be the vulnerable families? Are we looking at, 40 million families endangered? How serious is the impact?
You see, we are exporting a couple of products to USA. In many areas, the US is not likely to push export of those products which we are exporting to US.
Okay.
So in order to accommodate tariff, you see in trade negotiation, it is not straightway 2+2.
Okay.
There are so many ways in which the interest of US can
I
be
know.
like taken care.
Okay. Okay.
Like you know that we export rice to US and many other countries. Still, we are having duty of 30%, 40%, depending upon type of rice. As an example, we have that duty.
Yes.
So those commodity where we have strong advantage in export, where we are exportable, I call such tariff as redundant.
Okay.
So we can reduce those kind of tariff even to zero
Okay.
to see to it that that this gap between the tariff which US impose on our export and but we are having on their items.
Okay.
This kind of possibilities are there in couple of sections.
Okay, so then that will be the key question to you. How will India tackle it, or how should India tackle it? But before that, let me get Harish into the conversation. Harish, what is your sense? Will there be any flood of imports from the US that you fear?
I don't think immediately, Immediately, I don't think, like, for example, I don't think dairy products from the US are going to come. I think we have more to fear when it comes to dairy products, more from New Zealand or Australia or European Union than the US. And I think that the US basically wants to export, corn, cotton, and soybean to India. I think these are the main things, And plus, I think the US is losing a major buyer, which is China, so because that is a real trade war. So it wants some kind of a replacement market for China. And I think these are the three commodities which they are really interested in, in corn, in soybean, and in cotton. Whereas I think India, will stand to lose, a market, say, for example, shrimps, I think we do something like $2.5 billion, If tomorrow, if they were to impose, 30% import duty on shrimps, which is what the duty which we impose,
Yeah.
So going purely by the logic of reciprocal tariffs, then definitely that's going to be endangered. And same with, I think, Professor Ramesh Chand talked about rice, So tomorrow, if they were to impose, 30% duty on basmati rice. So I think we have definitely our export interests to defend.
Okay. So,
and regarding those other commodities, as I said, we need to take a call on those. And other things like, almonds and walnuts and all, I don't think we need to, because we hardly produce those things.
right. Okay, so according to you, exports are the ones that you would concentrate on, and there you think vulnerability of rice and shrimp. Dr. Chand, now for the real meat question. How should India go about tackling this reciprocal tariff threat?
One is, as I already mentioned, that we have scope to reduce import tariff on many commodities without any threat of large import coming into country. Like, for instance, we are putting duty of 100% on tea. Now, US doesn't export tea to India. That is for, say, other country like Sri Lanka or Vietnam, those sort of countries. So if you look at case by case, commodity by commodity, there are many areas where India can accommodate, but US want from India. And in this kind of situation, I feel we have to go for give and take, and already negotiations are happening, and ultimately we should move in the direction of bilateral trade agreement where the interest of both parties can be addressed. Even if we are having high bound tariff in some commodities, that is not that we are always applying. That is in case of special situation when international prices crash. It is that kind of situation that in order to maintain some sort of price stability for our producer, we are keeping that as a cushion. We are keeping that as a safeguard in those kind of situation. We hardly go to that kind of situation. So in bilateral talk, this kind of possibilities, flexibility can be built.
Okay.
So I think we should talk. We should just look at where we can accommodate accommodate US interest.
What is your best guess? What happens on April 2nd? Will we just promise this bilateral and get away with the status quo?
You see, it's very difficult to predict Mr. Donald Trump, but we should be trying is that we should seek more time. You can't do these things just under kind of hammer. So we should seek more time, and we should engage more frequently. And as I said, that in this situation, we should try to have a bilateral trade agreement with the USA, which is mutually acceptable to both the parties.
Okay, I guess that's why Mr. Piyush Goyal was in the US, and that's what they're trying to hammer out. Harish, what is your suggestion? What is our best way out, and what are you expecting on April 2nd?
No, April 2nd, let's forget it for the moment. Okay. But I think definitely there is a possibility for a bilateral trade agreement, and I think maybe we should retain our WTO bound tariffs for the present. But when it comes to the US, maybe we can have some kind of a special duty dispensation, maybe some kind of a tariff rate quota. We can say, hey, we'll buy so much of soybean oil from you at a concessional rate of duty. I think we can do something like this. So see, they want market access, and which we can give them, and we can give them maybe some kind of a preferential market access. So probably tariff rate quotas can be one way of doing it.
Okay.
But my feeling is I don't think Trump is going to be very aggressive with India beyond a point, because I don't think he would want to take on both India and China, and I think that is some kind of a leverage which we have, and because China clearly is going to reduce its purchases from the US, they are sourcing more and more from Brazil, from Argentina, from Russia, from Paraguay, all these countries, they are very clear, and so I don't think I think definitely there is some room for maneuver from our side.
Okay. See, going by the tone of President Trump, it does look like he's calling the shots and not we. Last thoughts from you, Dr. Chand. What is your sense that, what is the 1, 2, 3 things that you are expecting that we will do, provided we get time?
I think one, that Mr. Trump, his primary interest is to reduce trade deficit.
Yes.
And there are possibilities of reducing trade deficit in case of agriculture products. Latha ji, we are the biggest exporter of edible oil in the world. I think the latest figure is $18 billion US.
Import.
So that is what we are importing, and US produces a lot of soybean and even canola oil, those kind of things. So I think we can bring this in, that the best way to reduce the trade deficit in agriculture between US and India is to have more import of edible oil, vegetable oil from US.
Okay.
Also, the major import from there is the nuts, tree nuts,
yes,
dry fruit, particularly almond. That 40% of our import are from US. Already duty rate on them is 7%, 9%. Okay. Even if we reduce it to what US is applying on us, it will not affect our domestic consumers.
Okay.
We can also accommodate to some extent in terms of duty on temperate fruit, particularly apple.
Okay.
You look at the price difference between Washington apple selling in India and Indian apple is huge. Okay. So even if we halve duty from 50% to 25%, the price difference remains. The consumer buy US apple because of quality, freshness, juicy, and many other kind of things. So like this, there are many areas, I think, where we can offer give.
Right. That is good to hear, sir. Both of you are not sounding too alarmist. I was more worried about the agricultural sector. The industrial sector perhaps will have more elbow room. We will discuss that subsequently. Thank you very much, Dr. Chand and Harish, for joining me. Key takeaways, we should buy time first, enter into bilateral agreements, and perhaps give up a bit of duties in terms of rice, where we are anyway competitive, offer quotas, for instance, in edible oil, where we are anyway huge importers, and give US access to those markets. Markets like milk are not endangered. That's what our experts are telling us. That's it on this edition of Indianomics. Thanks much for watching.